Big changes are coming to crypto advertising in the UK, and they're starting sooner than you think. Google has announced a major update to its ad policies targeting crypto promotions. So if you are in the crypto space or even just a casual investor, then this news affects you. So stay tuned as we unpack what this means and why it's part of a global crackdown on crypto advertising. Google, the world's most popular search engine, has dropped a significant update that's set to shake up the crypto advertising landscape in the UK. Starting on January the 15th, 2025, advertisers promoting crypto-related products such as digital asset exchanges, software wallets, and NFTs must now register with the UK's FCA to continue advertising on Google platforms. And this isn't just a minor tweak, it's part of a broader trend of increasing regulation in the crypto space, and it's going to impact how businesses promote their services and how consumers engage with them. But why is Google doing this now, and what does it mean for the crypto industry? Let's break it down. So first, let's dive into the nitty-gritty of what's allowed. So under the new rules, advertisers can still promote hardware wallets. So these are physical devices designed to store private keys securely, like your Ledger or your Trezor. And also NFTs. Ads for NFTs are permitted, but with a caveat, and that is that they cannot be tied to additional services like buying, selling, or trading digital assets. And this distinction is crucial because Google's policy is designed to allow education and safe tools, but avoids enabling speculative trading or potentially fraudulent schemes. So what's not allowed here? Well, the policy is clear. Advertisers must register with the FCA if they want to promote exchanges, wallets, or any platform that involves buying, selling, or trading crypto assets. And if your business operates across multiple countries, then you're going to need to ensure that your campaigns comply with all local financial regulations and not just those in the UK. Google's emphasised this in their statement that they put out, saying that they expect all advertisers to comply with the local laws for any area that their ads target. And it kind of begs the question though, why now? Because this isn't happening in isolation. Over the past few years, we've seen increased scrutiny of crypto promotions worldwide. Regulators and tech companies alike are stepping in to ensure that consumers are protected. For instance, in the UK, the FCA has already issued warnings about unauthorized crypto advertising. And just this past week, they flagged a Solana-based meme coin project called Retardio, citing concerns about its advertising targeting UK customers. The FCA has warned that these unregistered firms pose significant risks, including the potential loss of funds if a company ceases operations. And there are actually global examples as well, because the UK isn't alone in tightening these reins. In Nigeria, for example, the Nigerian SEC has recently mandated that virtual asset service providers and even social influencers have to obtain a kind of pre-approval before publishing crypto ads. So this trend is reflecting a broader concern, protecting consumers from scams, misinformation as they're calling it, and the kind of volatile nature of unregulated crypto markets. Now, for advertisers, time is really of the essence. Crypto businesses have until only the 15th of January to actually register with the FCA. And if you fail to do this, you'll basically lose access to all of Google's powerful advertising platforms. This is including, search ads, YouTube ads, and other display networks. So it's no small loss. You think how big Google is. And so for many crypto companies, Google is actually a primary channel for reaching new customers. And without access, their growth and visibility will take a significant hit, I think. And for consumers, on the consumer side, these changes are aiming to make crypto promotions safer and more transparent. And by requiring FCA registration, Google is trying anyway to ensure that only legitimate regulated businesses can actually advertise. But it is going to raise some questions, because is this going to stifle, smaller, innovative projects that can't actually afford these regulatory hurdles? Or is it a necessary step to protect consumers from scams and bad actors? And if we take a step back and look at the bigger picture, there are broader, implications for the crypto market, because the crypto industry is still in its, Wild West phase. It's exciting, but it's unpredictable, and with rapid growth often accompanied by scams, and market manipulation. And so on the one hand, these regulations could stabilise the market by filtering out bad actors. They can make the space safer for everyone. But on the other hand, they can create barriers to entry, especially for smaller startups, smaller crypto firms that just don't have the resources to navigate these complex compliance requirements. So in many ways, this policy is also setting a precedent, and as one of the biggest tech companies in the world, Google's decisions often influence others. So could we see similar restrictions rolled out in the US, the EU, or elsewhere? I think we could. And so what's next then? Well, if you're a crypto business or advertiser, then this is basically what you need to do. You need to start the registration process now. The FCA registration can take time, so don't wait around, until the last minute. Get it done now. Audit your advertising strategy. Make sure your campaigns comply with the new rules, especially if you operate in multiple jurisdictions. And last thing I would say is just to educate your team. Ensure that everyone involved in your marketing department understands all these new requirements. And for consumers, stay informed. If you see crypto ads after January 2025, you'll know that they will have had to have met the FCA standards, which the FCA argue will make them safer and more reliable. And so Google's move here is just one chapter in this ongoing story of crypto regulation. It's a sign that the industry is maturing, but it also raises important questions about the balance between, innovation and oversight. What's your take on this? Do you think that these changes are going to make crypto safer? Or do you think that they risk stifling the industry's growth? Let me know in the comments below. If you found this video helpful and you've got some value from this video, don't forget to like, subscribe, and hit that bell icon. Stay tuned for more updates on crypto, finance, and the ever-evolving world of digital assets. I've been Chris Kenyon, and I'm helping you navigate the crypto world one update at a time. And I'll see you in the next video.